Let's move on here to buyer red flags. For me, it's buyer red flags. For you, it's borrower red flags,
Correct.
right? But what are some of these red flags that we're seeing with potential home buyers and things that we can look out for on the real estate side before we really commit, or to know that they're not being, serious home buyers, right? So one of those things I have here, again, is the pre-approval versus pre-qualification. Explain again why that is such a big deal to have vetted information, not just what the borrower says, what the borrower shows you.
Yes, absolutely. So a big red flag would be if somebody wants you to go show them a whole bunch of houses, but they're not willing to talk to your lender. That would be my first big red flag.
There we go.
And if they tell us that their income is such and such, but they're just not providing us the appropriate documentation, we are going to communicate with you and get you involved right away, so that you know that we're trying to collect things and we aren't getting them. So those would be red flags right there, is if they're not getting us the documentation in time, because we do want to collect everything right away so that we know exactly where they stand.
And listen, people make mistakes.
Right.
They may think they make $70,000, but upon further inspection of their tax form or their W-2 or their verification of employment, they don't make 70. They make 62. But they told you they make 70, so you pre-qualified them, or pre-approved them on something that isn't even true.
Right. And that happens a lot in this industry, unfortunately. And it gives mortgage professionals a bad name because they're giving false approvals and the client really isn't qualified. So you verify. And that's why we collect everything up front.
100%. One more red flag on the borrower side and the buyer side. When I talk to my clients, I like to meet them in person. We have a cup of coffee, something like that, to get to know them. And I do what's called a buyer interview. Right. Where I talk to them. Hey, Julia, tell me about you, your family. Where do you want to buy? Tell me about, your goals. We talk, we chat. Builds a personal connection. But then I say, Julia, tell me what you do for work. And then Julia says, oh yeah, I just started my dog grooming business and it's been 6 months. Red flag. There we go.
Yes.
And why is that a red flag for you?
Because we need 2-year history.
Okay.
So we need a 2-year history of owning that grooming company, and we need to see those tax returns from that grooming company.
And that's called 1099, self-employed. And what are your thoughts on someone that you think is a good candidate for buying self-employed? What are some of the things you're looking for?
We're looking that the company has stability. So we do want an accounting letter showing that there's stability within the company. We do want to see 2 years of business tax returns showing a profit within the company. And we're going to take a 2-year average of what their income was over those 2 years. What we don't want to see is unreimbursed expenses. So, and this has happened where someone says, oh, I made $500,000 last year. No, you grossed $500,000.
That's right.
But you wrote off $499,000 of it. You only made $1,000 last year.
Yep.
Doesn't qualify.
Nope, you don't get to have a house.
Yes, exactly.
Exactly.
And a lot of times, and I say this, I think that the average consumer just doesn't know. They may or may not know that their accountant wrote off everything. And so it's important that I see that so that I know where they really stand from a financial standpoint.
There we go. 100%. So that's a big deal when I look at that 2 years self-employed. Variable income. These are, during COVID especially, medical profession was working all these overtime hours. And a lot of these doctors and nurses, they felt pretty good about their bank accounts.
Yes.
Hey, I want to buy a house. But then when you look at some of these variable income, maybe they didn't qualify for what they thought they would qualify for. So, Julia, what is variable income, overtime pay differential? And tell us about that and how that affects it.
So the simplest way to put this is when anybody says that they have shift differential or, oh, I work overtime. Sometimes it's 6 hours a week. Sometimes it's 12 hours a week. Our team is going to request a written verification of employment from their employer right off the bat. And we do that almost all of our transactions up front before you even find them a house, because I need to see what their written verification of employment says. We're also going to look at the last end of year to date pay stub from the previous year, plus their year to date this year. And that gives us a clearer idea of what that variable income is supposed to be.
There we go. And what we don't want is, well, what the lender doesn't want is that someone who has variable income to really think they can afford a house, but they really can't because they have all this extra bonus and overtime that isn't going to be stable.
Right.
So it would be putting the buyer in a bad position.
Absolutely.
I think it's very responsible of us to be able to have that conversation with the person and go, hey, you think you're making all this money, but what if that goes away?
Right. And I always tell clients, I'm gonna pre-approve you for what you qualify for, but I'm gonna make sure you're comfortable with what your payment's gonna look like.
That's right.
Because those might be very different things.
And a lot of buyers don't buy sometimes based on interest rates and sales price. They make a decision based on what? The monthly payment.
Right. Most
people look at the monthly payment and they go, "Hey, can I afford this?" Well, rent's $2,400.
Yes.
A house is $25. No, easy, no brainer.
Uh-huh.
Yeah. A big one too that I see, and you're gonna laugh at. We talk about it all the time in the lending world. Is so you're gonna ask for bank statements, right?
Yes.
And if you see multiple, weird payments that account from Zelle and from wire transfers, 4,000, 3,000, 2,000. Is that weird? Is that going to raise some red flags for you?
Oh, yeah, 100%. So lenders want to see that what's coming into your bank, what's being deposited, is what your paycheck says it is. And if it's different, then the questions are going to arise. Well, are you receiving child support? Do you receive alimony? What is this additional income? Oh, I have a side job I forgot to tell you about, that I sell things online on eBay and get sent money. Well, guess what? Now we have to verify it.
That's right.
And if that was a piece of the down payment part, it may not be allowable, because if I have to back out that income, those deposits, because you can't verify, or the client can't verify those deposits, then at that point it doesn't become available funds as far as a down payment.
I'll tell you a story from when I bought my house. I was a full-time college student, going online, and I qualified for FAFSA. So I had I think it was like $2,000 payment, a FAFSA payment, right, that came to my account. And my lender said, "Well, what's the $3,000?" I said, "Well, I'm in college. They paid me my FAFSA." Oh, okay. Well, we need to have a letter. You need to explain it because the underwriter thinks that may be something fraudulent. I'm like, I promise you, it's not fraudulent.
Right.
But you see that with people that have payments into their account.
Yes, and the lenders have to be really careful, because we can't ever suspect that somebody is committing fraud. We always have to give them the benefit of the doubt. And with doing that, they have to explain.
That's right.
Yeah.
One more big one that I always want to ask the borrower, and you ask the borrower as well, is do you have enough liquidity to pay for closing costs and down payment? People never ask their client, do you have enough cash to make this happen? What's your process?
Well,
because sometimes a realtor, I may not feel comfortable if I just met them, ask them, hey, how much money do you have in your bank account? I may not feel comfortable doing that because it's kind of a weird part of our relationship where I'm not the finance guy.
Yeah, and I don't expect you to ask those kind of things either.
Correct.
Unless you feel comfortable enough.
Yeah, so how do you deal with that piece?
So we're going to ask for the bank statements right off the bat. And in the event that they don't have enough money to successfully buy the property, then I'm having the conversation, well, do you have a family member that could gift you the funds? Do you have a 401k that you could draw on? You would be really surprised at how many people have a 401k and didn't even think that they could borrow against their 401k to qualify to buy a house. So asking those kind of questions and finding that out is really big. And oftentimes, if it's a first-time home buyer, they can borrow against their 401k without taking any penalty or any hits.
Nice.
So that's a big deal. That's a really big deal. It's just asking the right questions. And if they don't have the down payment piece figured out by the time we are collecting those documents, I'm going to call up the agent and have a conversation. They really need to call mom and dad to talk about where this down payment's coming from. And I'm going to hold off on issuing any pre-approval until we make sure they have that money. Because you don't want, as the agent, to go out there, number one, wasting your time.
And gas,
number two,
and energy,
reputation.
And
Yeah. I mean, if you're telling a listing agent that this person's qualified, then we're going to make sure that they are.
Absolutely.
Yeah.
One other one that I look at and I say, oh, no, when I'm very motivated showing houses, and I say, hey, go ahead and get pre-qualified. Here's Julia's pre-qualification link. They pop up their phone, they pre-qualify on the link that you have, and then you say, hey, Ronnie, they've got massive debt, right? Does it happen often now here with people that they have all these debts they may not be aware of, collections they may not be aware of?
It does. It does. And sometimes I don't know if they're 100% transparent with what kind of debts they do have.
Are you telling me that home borrowers and buyers may not be honest about
it-
everything?
Yes. Or they really just don't know one or the other. So what we do, again, like I said, we're much more than just a mortgage company. We really set them up for success. So bad things happen to good people. And we know that things that happen are unforeseen when it comes to credit sometimes. So we're going to literally line by line go through the credit report and tell them what they can do to repair their credit. If they choose to do that is one thing. But if they do choose to do it, they will be the most loyal clients forever and ever. And they will be so proud of their accomplishments that they actually listened and cleaned up the credit.
100%.
Yeah. And we will educate the agents and say, hey, you know what, Mr. Jones, he's 9 months to 12 months out if he listens to everything we suggest.
You give them a credit repair plan. You help them do that.
Yep.
You check in on them every couple months.
Absolutely.
To make sure they're doing good. And this is a long-term pipeline that you're building.
Absolutely.
So as an agent, I want that. I want the lender involved in this to help me build my pipeline for the next 6 months. And so that I know that, if she goes back, this client goes back to Julia and goes, Julia, I'm ready. Julia goes, oh, hey, you're working with Ronnie? Give Ronnie a call. He's ready to help you.
Yes.
Right? So that's a big piece of it too. Now, talking about debts and about collections, disputing items.
Yes.
Everyone's got Credit Karma and these programs, and they try to dispute some of their items. That's great. But what, Julia? What can you tell us about that?
So disputes, we're going to ask the client to take off the dispute. So we're going to have them call all 3 credit bureaus and get them to remove the dispute, because a dispute could indicate that there could be a potential lawsuit in the works, whether it be from the borrower/buyer or from the creditor. And we don't want that to happen. So if there are disputes, we are going to ask that they remove them.
That's right. So disputes are great. Do them if you're trying to fix your credit, but don't do them while you're applying for a mortgage.
Correct.
Because you know that if something in dispute, it has to be resolved before you can borrow.
Correct. And if somebody has a judgment on their credit report, they cannot buy until they have satisfied the judgment.
There we go.
Yeah. And that's a big deal, because a judgment means that it has actually gone in front of a judge and there is a court filing regarding the judgment. And then at that point, we're going to require it be paid in full. And if someone owes the IRS money, that's another one. They have to get on a payment plan with the IRS and show proof that they've made 3 months of timely payments with the IRS or pay it in full before we can qualify them.
Fantastic. So those are some of the buyer red flags that as a new agent, unless you've done a lot of volume, you may not know all that.
Right.
So that's why it's great to have this video, to have your expertise on the podcast, so that people can say, cool, like, I'm new. I don't know what I don't know. Let me learn, right, from someone who has $140 million in sales volume going through their branch. So fantastic. Thank you so much for having that information for us.
Yes.